My goal for this video is to teach you all how to read price action in 10 minutes or less. I'm going to take you from just looking at a stock chart for the first time to be able to make educated guesses on where a stock is going to go based purely off the price action, not any technicals, not any indicators, just reading the price action. This is a very important skill, and it's not one that's overly complicated. That's going to be a large theme of today's video, is simplifying this down to the basic levels so that you all can make informed decisions without overthinking everything. So hit like and subscribe if you like this idea. Maybe we'll do more of it in the future, and let's just go ahead and jump into a chart and start going over this. So this is obviously the SPY chart, the S&P daily chart, and we're going to go over three different topics today. The first is trend, the second is key levels, and the third is very important, the most important, and that's how you can utilize price action in your trading. So make sure you stick around for that third lesson, even if you already know how to read price action. But first, let's go ahead and jump into trend. Now, sticking with that overall topic of let's not overcomplicate this, let's not overcomplicate trend. Where has SPY been in downtrend as of recent? SPY was in downtrend. Let me start here, not behind my head. SPY was in downtrend here. Obviously, SPY was in downtrend here. 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 Let's not overcomplicate trend. When SPY is going up, and then everywhere that is not circled, SPY is in uptrend for the most part, right? SPY has either been in uptrend, circled as downtrend. We don't have to overcomplicate the heck out of trend over reading price action, but let's make it a little bit more complicated so that you all know how to identify it. Trend is either uptrend when a stock is making both higher highs and higher lows, or it's in downtrend when a stock is making lower highs and lower lows. So as we defined here, this is the first downtrend. So let's go ahead. Well, let's start with the uptrend actually. So let's start from this low here. So if you're just looking at this here, you're just looking at this, the high of the move is this, the low of the move is this. This is your current high, current low. What does it do from there? It pulls back. It makes a higher low, and then it makes a higher high vis-a-vis breaking through this previous high, right? It didn't go break this low down here before turning. And I consider turns when you get candle over candle, meaning when you get a candle print over the top of previous candle or below previous candle. That's when I consider turns. So the stock, made a low, made a high. It turned before it broke this low, and then it broke that high. That's the start of uptrend, right? And it pretty much rides uptrend all the way up. Now, we do have one example here. This is important. We do have one example here of it breaking a lower low. That is not confirming trend change yet. It's got to do both a lower low and a lower high. It did not come make a lower high here. If anything, it touched right into this, and then it made another lower low or another higher low and higher high. So this did not give you both really what you want to see. And now let's touch on this here, I guess, why this isn't downtrend and this is, other than the freaking obvious. But you want to be able to identify this in real time, right? It's weird going back and doing this in the past because it's like, oh, no shit, Trey. But you want to be able to identify this in real time, and you will be able to if you look at it this way. So why this one is different, because this obviously, here's your previous low, previous high. Let's start here. Let's make these a different color. Here's a previous high. Here is previous low. Now, what this does, it comes down, it makes a lower low, right? Then it makes a lower high, and then it confirms right here, it confirms downtrend. Because it breaks the lower low again. It makes a lower low, makes a lower high. When it breaks this, it's trend confirmation. We are definitely in downtrend now. That is how you identify trend. That is how that is done. I can try to show you one more example. Let's start here. So let's go previous low. Oops, I'm on the wrong drawing. Let's go low high of this current uptrend. It breaks this low. It makes a lower high, meaning it did not get up to this high. Actually, no, let's do it here. It makes a higher low, so yay, yippee. Then it makes a lower high. Uh-oh, well, whatever. It doesn't mean anything yet, right? And then when it breaks this low here, it confirms downtrend. This confirms downtrend right here. right? Because it breaks, it makes a lower high and it breaks the previous lower low, confirming downtrend. And SPY was in downtrend from then for a while. Why is that? Lower high. Once again, this is now your previous high here. This is your previous high. Did not get up to there. Lower low. Lower high. Well, actually, this is a higher high, but then what did it do? It failed to make a higher low and then a higher high. It failed to break through this high again, right? I know we're getting a lot of lines on now, but it failed to come up and break through the, yes, higher high. Woo, we did it. We're back in uptrend. Nope. It's got to make a higher low and break through this to confirm. It did not do that, so it stayed in downtrend for a while there. So hopefully that makes sense. We're already halfway through this video. The goal was less than 10 minutes, so I need to move on. I'm trying to simplify this and trying to talk through it, but if you have any questions, please let me know in the comment section down below. That's trend. The second part of price action is key levels. So you want to be able to identify trend, and then within that trend, you want to be able to identify support and resistance. That is what key levels are. There are two ways to identify key levels. One is if the level is touched multiple times, and two is if there is a major reaction off of that level. So there is a key level on SPY. Let's start, can't start that far back because you can't see. This is a key level on SPY. Why? Major reaction, 0.2. This had a major reaction. It touched 218, reacted giantly. That makes this a major level on SPY. Now, we have not seen a retest of that. Hopefully, we don't ever see a retest of that. That would be nice. But maybe one day we see a retest of this level, right? This is a key level on SPY. First off, it was a key level even here. Even before it came back and tested, it was a key level because it went from 320 and huge just a couple days later was already up to 340. That's a big reaction, right? And then look at what happened when this retested, when this got down to this level. This gave you an area of support. This gave you an idea. All of a sudden, what are you starting to see now? All of a sudden, from the first lesson, you've identified this is an uptrend. It's making higher highs, higher lows. This is in uptrend, and it's pulling back towards a key level. All of a sudden, this can become an entrance, right? All of a sudden, you can enter somewhere around here because you have an area, you have an area of uptrend towards support with a defined risk, right? You know, okay, well, if this breaks this key level, I'll just get out of the trade. That's going to be actually, let's just transition into that a little bit now. That is kind of the third step of this, right? Is how to utilize this in your trading. Price action is not causation. I see too many people on Twitter or anywhere on the internet. I'm not going to put all the blame on Twitter, but they'll draw their lines, right? And by the way, I didn't speak to this, but like you can draw trend lines. I tend to not draw trend lines. Like for my trend, I tend to just would rather look at the higher highs and lower lows, but you can draw trend lines like that too. But not important. Either way, I see people on Twitter do this, like they'll draw this line, we'll go, okay, well, SPY will bounce here, SPY will bounce here. Price action is not causation. The stock is not going to bounce here just because of your line, just because it bounced here before. But it's correlation, right? So there's still money to be made in correlation. Guess what? Now that you know how to read price action, you're buying a stock in uptrend on a dip towards support. That's a good buy. Even if it fails, that's a good buy because you know where your risk is now. Now that you know how to read price action, you know if it breaks 320 down, that's your risk. But it's not really even any more likely to bounce off 320 than it is anywhere else. Once again, this is not causation. Too many people get this great idea that, oh, I drew a line, it's so visual. People want everything to be so visual that it has to bounce here. It doesn't. But what it does is it puts you in the right areas. It's still an important lesson because it puts you in the right areas. You're buying stocks in uptrend towards support. You're shorting stocks in downtrend towards resistance. Same idea. But let's now continue going through this. Let's find some more key areas on SPY and on potentially some other stocks as well. Actually, we won't have time to do that. But here's a key level on SPY. Why is this one a key level? It's bounced, and look, well, this didn't bounce straight. It broke below. Okay, these don't have to be brick walls. They don't have to be exact to the penny bounces. It's close enough, right? Bounce, once again, correlation, not causation. It's not gonna bounce here just because I drew this line on my chart, right? But bounce. This one probably not quite close enough, probably broke through it, but one failed attempt. And then guess what? When it broke through it, these levels, support can become resistance, resistance can become support. These levels remain intact. So once it broke through it, resistance. This is now a very key level, as you can see. And you could have had this drawn after you saw this bounce, you could have drew this line, and all of a sudden you would have had an idea that there's a resistance here on SPY. And guess what? SPY is in downtrend and pulling up towards a resistance, towards a key level. So now, just like the long I pointed out, and obviously this is hindsight trading. Anybody and their mother can hindsight trade. I understand that. But you could have gotten in short somewhere here with the idea that you are now in a downtrending stock trading up into a resistance level. So that is reading price action in 10 minutes or less. We did fail. We'll try to do better next time. We're a little over 10 minutes. But in this video, you learned how to identify trend, how to identify key levels, and kind of the idea of price action, that it's not causation. Because you drew a line on your chart, please don't expect the markets to bounce off that. You still have to use this information and formulate a statistical edge over the market. This is not because you drew a line, you do not have a statistical edge over the market, right? This is helpful correlation. It's not causation. Please don't just go, oh, Trey taught me how, so I'm going to draw a support line here, and next time SPY comes down here, I expect it to bounce. Please, what price action will do is help start to put you in the right areas for your buys and for your sells. So hopefully you found this helpful. Hit the like button if you did. Hit the red subscribe button if you're new. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.